Good morning, everyone, and welcome to the European crossover webinar. And bear with me, just saying good morning to everybody. And I'll wait an extra couple of minutes just so we get started. Last day of the week. New all-time highs over here. And we're going to get started, and time just ran past me. Didn't even realize it was already that late. But anyway, let's go on and get started and take a look where we stand right here on the euro. Right here at 22.31, and we have gone and paired back a bit and looking for a little bit lower here, but we did go in and get this bearish engulfing bar with the euro. And let's go and just quickly take a look at the news for the day ahead. And I cannot believe these equities. I actually had taken a short, but I took a scalp short, and then I took a short later as the market went higher, but it went in my favor a little bit. Then eventually I did end up getting stopped out, which was unfortunate. Bear with me. Okay, there we go. And take a look at the economic calendar that we have for today. And at the top of this next hour, we will go on and get, well, we did have a little bit of news prior to this, which we did go on and get French industrial output along with French imports and housing prices out of the UK. But at the top of this next hour, we'll get Italian unemployment rate, Eurozone unemployment rate, and of course, you get the big granddaddy of all, and which is going to be right here, U.S. non-farm payrolls, along with Canadian jobs. So it's a pretty good mover. And then wholesale inventories. There we go. And let's go on and there we go. And take a look at where we stand across the board. Taking a quick look on here with cable, relatively quiet. Like I said, a couple of days ago, we had this near long-legged doji, and did go on and suggest that we could go and turn a little bit lower, which we did yesterday, but still was in a pretty tight range overall. And we're seeing the same thing today. Not expecting any real big movement as we go into non-farm payroll. And what we'll do is we'll just go and take a good little quick little look on the news. Sterling rises against a weakening euro, and gain seen as temporary. Sterling gained a broadly weaker euro on Friday, making up some of its losses it sustained against a shared currency as the new year begins, though it was still back to the end of the week in the red. Increased market pricing, negative interest rates from the Bank of England following fresh lockdown measures in Britain to combat the coronavirus has dented the pound, capping gains made the week of the Brexit deal again at the end of last year. Markets are pricing in sub-zero rates from Britain's central bank as early as May of 2021. Analysts caution that this will limit sterling's gains against the euro, and euro sterling remains above the 90 pence level as the buildup of rate cut expectations following the third lockdown offsets the positive effect of the UK-EU trade deal. While we still see the room for euro sterling to mildly drop below 90, this should limit should be limited to given rising risk of further Bank of England easing, while sterling is to benefit less from the conducive global risk environment in comparison to its European cyclical peers such as Sweden's krona or Norway's krone. Sterling gained as much as 0.5% against the euro to 89.98 pence in early trade in London. Sterling began 2021 at its highest levels against the dollar since May 2018, after Britain clinched a last-minute trade deal with the EU. Those gains have evaporated fast as Britain grapples with rising coronavirus cases amid the discovery of the new strain of the virus. British economy is also beginning to feel the ramifications of the life outside the EU. More than 50 British retailers, including Tesco and Marks and Spencer's, face potential tariffs for re-exporting goods to the European Union, their trade body said, amid warnings this could be Britain's less competitive. Survey of Deloitte showed a wave of optimism washed over bosses of major British companies in December ahead of the tightening COVID restrictions. Still, half the respondents said it would take at least until the end of 2021 before the revenues return to their pre-pandemic levels, chiming with the Bank of England survey published this week. Britain's job market strengthened for the first time in 3 months in December before a renewed lockdown this month, with an increase in permanent hiring and a small rise in the number of vaccines, a monthly survey of recruiters showed. And of course, the news on Bitcoin. Bitcoin slides more than 5% after topping 40,000 for the first time. Bitcoin fell more than 5% on Friday, a day after topping 40,000 for the first time. The world's most popular digital currency slid to as low as 36,618 on Bitstamp exchange after reaching an all-time high of 40,402 in the previous session. Rival cryptocurrency Ethereum sank more than 10% to as low as 1064.89. Bitcoin has rallied more than 700% since a low in mid-March. It topped 30,000 for the first time on January 2nd after surpassing 20,000 on December 16th. Market participants had warned of a correction after the $40,000 milestone was reached. Increased demand from institutional, corporate, and more recently retail investors have powered Bitcoin surge, attracted by the prospect of quick gains in a world of ultra-low yields and negative interest rates. JP Morgan strategist wrote on January the 5th, the digital currency has emerged as a rival to gold, as could trade as high as 146,000 if it becomes established as a safe haven asset. And on to the dollar. Downtrend takes a breather amid higher yields as job report looms. The dollar held on to the biggest gains in more than 2 months against its peers on Friday as a rise in U.S. yields triggered more unwinding of bearish bets on the currency. The greenback bounced off a nearly 3-year low, with traders taking profits against the euro in particular, following a slide in the dollar index of nearly 7% in 2020 and as much as 0.9 in the year amid expectations of the U.S. fiscal stimulus. Democrats won effective control of the Senate this week, giving President-elect Joe Biden scope to push through more spending, which analysts say will be more negative for bonds and the dollar. The benchmark 10-year yield topped 1% on Wednesday for the first time since March. There were some aggressive dollar shorts being brought back, said Bart Wakabayashi. Investors now await the U.S. payroll later on Friday for clues on whether significantly more stimulus will be needed to keep the economic recovery alive. The dollar index was little changed at 89.85 in Asian trading after dipping to an almost 3-year low of 89.20. Remember, our support had been 89.12. The Aussie dollar was also little changed at 77 US cents after sliding 0.5% in the previous session, and the greenback bought 103.90 yen after gaining 0.7 to close at 383 in New York. U.S. payrolls report might be viewed as a potential litmus test for dollar bears, TD Securities analyst wrote in a client note. Position is stretched and And the backup in US yields has some investors nervous. One call for negative print might be large enough to trigger a liquidation in shorts, but we think a defensive posture is tactically warranted nonetheless. And we'll take a look at where equities are. As I mentioned, we did go to all-time highs. Bear with me. And I shared this in the morning, and you can see how we were on this 30-minute chart, and the market got very tight. We'd taken a dip in Asian trading. Well, actually, it was early European trade, I believe it was. But anyway, right here, and as we came into the U.S. session, we saw this market bolt, and did it bolt. We did not see any lookbacks, and if you take a look at here, new all-time highs in the Nasdaq, and it actually looked open to moving lower. I was even sharing this in the European session. I was saying, hey, look, it looks like it, and it did look, we had already broken this trend line. We came up here, and we're just kind of sitting here after this dip back. I said, well, it's going to be key if we get above 753, and we got above that, but we're still moving higher. And it wasn't until once we got above the 603 that really opened the door for this market to go higher, and higher it did. So now with this moving to new all-time highs, bear with me. There we go. But it certainly looked like it was open to move lower here if we broke back, and certainly we just went and broke higher. And we made that run to new all-time highs. Now taking a look here at Bitcoin. You can see we made it up to the 40,000. We pulled back, but we still continue to maintain this move up in here. It looked like we have a hanging man. And we certainly did go in and pull back from above 40,000 down here to the, sub 37,000, actually dipping down here to almost the mid 36s before we recovered right back. This market is just so resilient because this was a pretty decent little pullback, but we keep turning around and coming right back up. And last week, and remember, we pushed higher, and the thought was, wow, if we're here as we come into the weekend, they'll probably try and push above 40. Well, they did get above 40, but right now, for this market to do so well and still trying to hang on, we could end up trying to push even higher and make it another push here. And if we do that, then holy smokes, my guess is we probably come around closer around 43, 44. And you can even see even a recovery here in Ethereum. Now, this is only on the 5-minute chart, but look here. Pretty good pullback. Look at that. Hell of a pullback. But look how much we recovered right back. Now, we would have to get above 1231. But nonetheless, as I mentioned, I am surprised how well we've held up in here. And the idea that we keep snapping back, they try and knock it back, and we snap right back. This was key here. If you look right there, see how you can see the bar right there. We see how we got that close right here on this bar, got that right above that. That is key there. Let's go on and we'll mark that off. we're able to jump right back and close right above here. So this type of move makes you think that it really wants to just take off again. You would have thought that we would have slid here after we did, and we, like, let's say we hang here, we take another move. Doesn't have me move all the way down here, but we kind of keep it on the negative here. The idea it pops back up is like Blake's analogy about the beach ball. Try to hold a beach ball underwater, and it just seems like they try and yank it down, and it pops right back up. You're thinking, "Oh, great! Now it pulled back. I took my profits." I'm just saying figuratively. I'll look to go on and buy some a little bit below 35, and probably another one if they challenge 29. This thing comes right back and just snaps right back up again, and look where we're at. If we finish the day above here, it's really going to open the door for them to once again challenge it. If it gets a foothold of this 40,000, watch out. That thing is just not going to want to let go. But as you can see here with the Nasdaq, once again, new all-time highs. Take a look in here on the S&Ps. Same here, this big drive up here. With that, we'll go on and do the analysis. I did not expect this to move to all-time highs at this time. I have to admit that. So the euro posted a bearish engulfing bar on Thursday. You can see here's Thursday. See here's the prior day's body. You can see here we engulf that. The pair has the potential to go down to 21.75. Immediate support will be 22.13 with resistance at 22.96. So we'll go with the 21.75. With resistance at 22.96. Onto the cable. So cable closed lower on Thursday following the long-legged doji. You can see here's that long-legged doji we had. So it did open the door we were looking at for a move lower. We've talked about that before, is that when you get a market like this, a long-legged doji, generally, well, bulls don't have control, bears don't have control, but generally going to go counter to what the trend's been. Well, obviously the trend's been much higher. So that's where we're looking to open the door for a move lower. Support on Friday will be 34.96 with resistance at 36.25. It's 34.96. And 36.25. And on to the Aussie dollar. So the Aussie closed lower, but within the body of Wednesday's close. You can see that here. Here's Wednesday, and I should say with the body of Wednesday's bar or trading range. You can see here. We did close lower, but it's within this body here. So support on Friday will be 77.06 with resistance at 77.95. And then on to the Kiwi. So the Kiwi closed lower on Thursday, but within the body of Wednesday's close, also support will be 72.04. You can see here's Kiwi, just nearly identical the way that Aussie did. Support will be 72.04 with resistance at 72.95. Then on to the dollar CAD. The dollar CAD rallied to 27.30 before paring back. As we go before paring back to a slight positive close. You can see here it pushed up to 27.30. We did close higher slightly, but we did go on and pair back after rallying to that 27.30. The pair is open to a short covering push going into the weekend. Support will be 26.52 with resistance at 27.39. Obviously still bearish. Onto the peso. The dollar peso posted a bullish engulfing bar on Thursday, closing above 1996. Resistance is going to be 2207, followed by 2007, I should say, followed by 2013, with support at 1983. And on to the dollar yen. This was a lot stronger rebound than what I would have expected. Um, The Dalian posted follow through buying. Here we go, follow through buying on Thursday with a close above 378. That was key there. Resistance on Friday will be 422. And we've already had a pretty good run up in here with support at 330. And on to the dollar index. So the dollar index saw a mild short covering on Thursday. And like I said, considering how oversold this is, that is very mild short covering. Resistance on Friday will be 90.34 with support at 89.53. And then on to the cross rates. Wow, this is just unbelievable. This thing just keeps rallying. We did have a resistance here at 75.11. Obviously, we pushed up all the way up here to 75.56. Resistance is going to be just straight up at 75.50. But this thing is just, it's unrelenting. It's relentless. I should say unrelenting. We had support at 74.34, but that's going to have to still move higher. I don't even know if it'll go that low here. Yeah, we'll go with that with 74.85. This pair's been something else. And it's just a one-way street. Look at that. Even after you go to new highs, you think, okay, now it's going to pare back a little bit. And it just is saying unrelenting. Let's go to the Euro pound. And this one's all over the map. I mean, there's just no, I don't say no rhyme or reason, but it's just, we begin the start of the week down here. Looks like we're going to expect extended move. We rally up in here, and now here we are going right back down. Support right now is going to come in right there at 89.77. With resistance at 90.56. Onto the Euro odd. Well, it looks like we're heading lower here. Look at this. And if we take a look at it on the weekly level, there's support right there. 57.09. That's key weekly support too. With resistance right there, 57.72. And onto the Euro Kiwi. This is just, look at that. Just right back, new lows again all over. And that will be the support level. Let's 68.02. And there's going to be resistance right there. 69.03. And onto the Aussie. Looks like the market may be getting a little bit tired here. Now, this is on a 2-hour chart, but let's take a look on the daily. Another run up in here. It's been as high as 80.91. Let's see if we can see anything on a 30-minute. That would be resistance, 80.85. And that would be support right there, which would be 80.33. Look at these markets just essentially one direction and just not forgiving either. Now on to the guppy. And once again, pushing higher here. We're right at resistance. You can see this lower wick, 41.29. And support is going to be right there. 40.04. Let's move that a little bit higher right there. Cross that body close, which would be 40.31. And on to lastly with Sterling Odd. You can see that they went and challenged the this area here again. That was actually on the week, but let's take a look on this daily. That's going to be support right there, which is still a ways off. Well, they came close to hitting it this morning to this body. Let's go and take a look here on the 2-hour chart. Let's call it 74.48. And there's going to be a resistance. We'll go actually right across that body. 75.33. You can see here, Bitcoin is still pushing higher here. Look at that. But these moves are just, what can you say? NASDAQ, new all-time highs. Looking like it wants to surge even higher. That's on the daily. S&P's new all-time highs. I mean, it's hard to fight this thing. I mean, I came in, I had one scalp yesterday, and then I came in later in the day after we had this run. The market did pare back a little bit, but it reasserted itself, so I ended up getting stopped out. And right now, I'm just going to let it see what it does going into the, as we wind up the day, because we've got non-farm payroll, and there's been so much calamity in Washington too. It hasn't made any difference. This market's continued to go and move higher. Taking a quick look at gold. And I think it was Didier that asked me yesterday here. I think it was Didier asked me where gold was going, and I did say we're looking for 1895 after this dip, and we've even gone beyond that, but that was the initial target on that. But with that, we'll get ready for non-farm payroll. We'll see there. And like I said, all-time highs. I don't see anyone wants to go and try and step in the front of this. And if you look on here, it's just gently trying to go higher. But going higher, it is going higher nonetheless. It's almost like this Kiwi where there's just no pair back. And look at the ranges are just really tight. Of course, it's going to be a little bit slower because of non-farm payroll, but we're just not going anywhere except a little bit higher and continuously. But with that, we'll go and get the bias chart posted, and we'll go in and see you in the chat room. And thanks for joining us here on the European Crossover webinar.